Good morning, traders. It is 8:01 a.m. Chicago time on Monday, the 11th of April, 2016. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A fairly muted session overnight until about 2 o'clock, 3 o'clock. Strong rally. Looks like the overnight range was done in about 15 to 30 minutes in a spring on the ES from 32.50 to 52, with the market flagging on the high side. When I shut down last night, it seemed like there was a flight to safety. The equities were down and money was moving to safer assets. It seemed like it was a continuation of what we had at the end of last week. Things reversed, definitely took a very, very hard turn at 3 a.m. or 2 a.m. looks like. 2:15, 2 a.m. right on the European Open. And then the Treasury, the equities rallied with the Euro stock strongest at 1.16%, up 33 points. The DAX following on its heels, and then crude oil just popped higher about 70 cents. Crude oil is trading up 41 cents, up 1%. And then the usual suspects when we have a flight to or movement to risk assets. The bond is down the most, 0.38%, and the Bund, followed by the Bund US dollar, then the 10-year notes. So the market is in a risk-seeking stance this morning, with quite a bit to look forward to. There's a meeting between President of the U.S. Obama, Biden, and Yellen taking place behind closed doors at 10:30 Central, 11:30 Eastern. Very few reports of that. I saw a tweet on that last night. I thought that was kind of odd. It's not on any of the calendars that I'm looking at. But when we look at today, as far as the calendar is concerned, it's pretty free and clear. At 8:25 Central, 9:25 Eastern, in about 20 minutes, we have Fed Speaker Dudley. And then at noon Central, 1 Eastern, we have Fed Speaker Kaplan today. Since it's Monday, looking down the line at the week, tomorrow we have German CPI, UK CPI, PPI, RPI, US import prices, and monthly budget, Fed's Harker, Williams, and Lacker. Wednesday, European industrial production, US PPI, retail sales, and business inventory. And ECB's not speaking on Wednesday. Thursday, we have European CPI, Bank of England rate announcement, asset purchases target. The U.S., we have CPI, and we have Fed's Lockhart and Powell. And on Friday is the UK construction output, European trade balance, U.S. Empire manufacturing, industrial production, University of Michigan, and Fed's Evans. So you can see a fairly widely distributed set of releases for the week. And that's how things are shaping up for now. Let's take a look. Let's start out with the usual review of what was expected on Friday. Remember to turn up your resolution to 1080p. This was Friday's Trader Bite here. The primary expectation, since we were opening just above or just at the high of Thursday, the expectation is we would likely drop into the 2045, 43, 45 area to find buyers, and then we are likely to continue the trend higher after dropping. It seemed to reverse Friday's overnight session seemed to reverse Thursday's day session seemed to reverse Wednesday's. We are in a balance zone, and we were battling this high volume microcomposite area. That was the primary expectation. That didn't work out. Instead, we got hypo 2 on the nose. Here we go. Hypo 2 was an attempt higher early, take out the overnight high. Notice the overnight high on Friday, 2053, is just above the overnight high today. We're basically back in the same stance. The expectation is take out the overnight high, drop to 40, drop to 40. Well, yeah, the point of control is 4150 or so. Drop to 4050, which is an extremely important level at this point. Chop around and then continue lower to 35. 35 being a key weekly and liquidity level. We've seen us battle this 2035 level for a couple weeks now. And now let's take a look at how things shaped up in the real world. So here you have it. Opened up, took out that 2052 high on Friday, 2053 high or whatever that was. The let's see, it was 2053 high was the overnight high. Took that out and to 2054 and a quarter. Rotated down to the point of control to 2040.50. Chop around as we would expect at a high volume node. A push up to this mid, which was an insanely beautiful setup. I unfortunately was not here for it. It occurred right over lunch. It pulled back to the mid VWAP and the key LVN, which we've carried over for a couple of days now. This key LVN, if you look down the line, you'll see that there's just no volume at this level. This 2045, 2046 area, we've hit kind of a ceiling every time we've tried to pull through it the first time. Pulls right up to 2046 for a 12-point drop. Where does it go? It goes right to 2035. Threw up by 4 ticks at 34, closes the gap, and then we have a small pop-up. The point of control shifts for the day from 49.25, which was up high, to where it ended up being, which is in line with the microcomposite point of control, 2040. It's not random. The whole point is I want to draw your attention to this 2040 level. This is not a random level. The fact that we chop here is not random. The fact that the point of control moved down here at the close with a ton of volume going off. Look at this volume here. Ton of volume going off right at the close, and it's shutting off right at 2040.50. Again, not random. We'll look at that a little more deeply. This is a very important area to watch out for. So overall, we stayed inside of this balance zone in here, and market is opening on the just above at 2050, but it's still opening in range outside of value, but well within this multi-day balance zone. I want to walk you through a quick walkthrough here of how things have expanded so far. So what I'm going to do is I'm going to walk this profile back and show you how the auction has expanded. So we had a gap up day on the 30th. The next day we opened in line, tested higher, and rotated down. So that sets us up for for a microcomposite, excuse me. And then the Friday, the 1st, this was Unemployment Friday. We run into this rally and we open lower and we rally across and end up taking out both days in range, engulfing both days in a bullish day. But as you see, it's trading more and more and more in that 2057 area, and that's why we have it highlighted as an MCV pot. But then eventually what happens is, as you watch this profile build, you see it's getting fatter and fatter down below with a clear cutoff point in the 2046, 2045 area. The microcomposite point of control remaining at 2057. That's why I have it highlighted up there on our flex levels. but you can see it's constantly expanding since the unemployment Friday. It's constantly expanding down and putting in volume, more and more volume, until we are where we are today. The volume keeps building at 2040. We have a double distribution profile with 2045, 2046 being the MC, the key MC here. I need to add that to the flex levels. You'll see that update on your charts. But that's how things are playing out, where we've tested higher and we've just consistently fallen off and built volume lower and lower and lower throughout last week. So the market is accepting these lower prices for now and is trading a fair amount on those low prices. Let's switch gears. I know it is Monday, so this is going to go a little bit longer than usual. Let's switch gears and look at it from a market profile perspective. This is a monthly market profile chart. This is January right here. This is January right here. Not January, I'm sorry, March. And this is Feb below. So you can see that March really ran away from February, putting our one-time framing on a monthly basis way, way, way below. This is the price that it has to take out. Again, this is a price highlighted on your flex levels that it has to take out to reverse the one-time framing up. We were one-time framing down until this happened. So so here we go. So we were one-time framing down, meaning lower low, lower low, higher low, lower high, break higher, and that became very bullish. And we talked about that a while ago, a couple weeks ago, that sellers be cautious, and then we're holding on to this area that has a ton of trading on it, and we're stuck here. So we're stuck in this big area that we've traded in for quite some time. Last year we were stuck in this area for a long time, from the beginning of the year to about July, before the August drop, and we're back here. So one of the things I'd like you to observe is on this monthly profile, look at the shape of this profile so far. Now April's only had a week and a day, but the amount of volume that's going off down here at 20, 40, 50, and the shape of the profile here leads me to believe that we are likely churning and are ready to blast off from here. I'm watching out this week for a breakaway from here. So if we compare last week to this week, you'll see that, or the last week to the prior week had a higher high and a lower low. So we had an inside week last week, and we have a lot of volume going off on last week right here at 20, 40, 50. Again, this is really an important area to watch. It's where we closed Friday. It is the point of control of Friday. We're trading above it now in the 2050 area. So the initial expectation is likely to be pulled in, to be magnetized back to the 2040, 50, but I'm bringing your attention to the fact that we had a compression week last week with a fairly hefty high volume node. A lot of trading occurred in this area, and generally when that happens, we tend to break away from this area. I'm drawing an arrow up simply because I have to go with the trend until we stop the one-time framing up. The expectation is it's likely to take its path higher. Don't forget that Alcoa starts off the earnings season today with an announcement after the market. Alcoa being the first stock to announce. So we're getting into the earnings season now, starting today. So that may be a catalyst to push things around. The next area up that we have to be concerned about is again 57. So you can see it on the market profile clearly here. A ton of volume just compressing, and this is likely to lead us to move away from this area as balance leads to imbalance. Okay, so I want to make sure that everybody had a look at that and is considering the bigger picture. I'm going to take this profile here and shift it forward to only show us what we've traded in the last few days of balance in the short range. Okay, so here's what we have. We're trading up here in the 2049. We're trading this upper distribution, this little upper uh, high volume node. Again, the cutoff point is 46, 45, 50. So this morning I'm watching for the market to make an attempt, a responsive attempt down to 2040. If it gets through the 45, 46 area, then it's likely to tag 40.50, and that sets us up for a trade. So I'm looking for it to try to push through 2045, attempt, and then if it does push through, it sets me up for a small initial trade, maybe 3-4 points down to 2040.50, and then I expect it to churn around here and then potentially attempt to push higher. I know we've opened and pushed down over the last couple of days. I expect that. I don't expect the same today. I'm looking for it to open, push down, and push up. However, Hypo 2 is just that. Hypo 2 is for it to open, make an attempt at the high. If we look at the overnight session, we'll see that the high is now weak. Make an attempt at the high, come back to 2040, chop around, and then continue to push lower and get through that 2035 area. I'm very interested to see what kind of liquidity we get down there. But that's Hypo 2. Hypo 3 is a choppy open, attempt lower, hold the 45, 46 area, and then start to work its way back to 57. If it gets to 46, 45, we start to target to 57. We're looking for a 10, 11 point trade there. So that's, wow, that's a terrible 3. So that's what I'm looking for as far as the key plans for the day. Okay, so that's that. I'm way over my time. I'll let you kind of digest that a little bit. Make sure you take a moment before you start to trade. Make sure you take a moment to close your eyes and just breathe, relax before the day opens. Don't come into the day with a lot of anxiety. It taxes your awareness. It taxes your emotions. Just let the market set up. It is Monday. Let it set up. Let it play out for 15, 20 minutes before you start to really seriously look for who the participants are that are in control. I can't give you better advice than to just breathe, relax into it. Okay? Good luck.